All right, so we're gonna be looking at XAUUSD and US 30 for a example. So for a quick recap, we're gonna be going over how to play swing trades. And for those of you who don't understand what swing trading is, there's different types of trading. Swing trading specifically is where you place trades and you take a couple of hours to um, take profit of the trade or stop the loss or whatever the case may be. You typically hold the positions for a couple of hours, a couple of days. So swing trading is more like longer time frame, like you wait on it, and it's not an instant profit. It's not scalping where you're just going in and out of positions. Swing trading involves patience. Swing trading involves technical analysis and fundamental analysis as well as risk management. So what is the risk management? You have to place take profit and stop loss. If you don't do that, then there's no point of swing trading because you will lose all your capital. If you're swing trading, especially pairs like US 30 and XAUUSD, and you do not have stop losses, you're fucking yourself over big time. So do not do that. My personal go-to types of swing trading when trading US 30 markets is just before anticipation of a market opening or a volatile moment. For example, let's say non-farm payroll or CPI consumer price index. I like to place stop orders. You guys know how much I love my stop orders when it comes to trend market. So in regards to the swing tradings, this is how I like to go about it. For trending market, stop orders, consistent, consolidation period. Now I'm gonna tell you guys the difference between the two types of scenarios. So trending market, this is very evident that is currently downtrending in the US 30 pair. However, a consolidating market would be something like this. So consolidation between Thursday to now on Ethereum, we're trading between 3,000 and 3,200. It's just been going up and down, hitting the same highs and the lows. So this is what we call consolidation period. Consolidation period. Or you can even name it market is ranging. So when the market's ranging, it's basically saying it's reaching the same high, same low, same high, same lows, back and forth, hitting the same support and resistance over and over and over again. So for those type of market, the best type of trades to place is limit order. So if you guys want to take a second to write that down, I'm going to give you guys a quick second. Write this down. Consolidating market, ranging markets, place buy limit orders, sell limit orders. And for trending market, it's more ideal to place stop orders because stop orders are placed above and below. As we're about to approach a trend, we're able to take profit on those positions, whether it's a downtrend or it's an uptrend. You're able to fly right through and take significant profit. Now let's go down to the real deal, the real business. Now that we got the mechanism on how to identify which types of order to place, we're gonna now go over what we need to do in order to identify some entries. So I personally like to use the RSI divergence technique as well as the RSI oversold overbought technique. And I like to mix it with the MACD technique or moving averages. So what I'm going to do is I'm going to go on the daily time frame and see what the market's doing. Okay, currently on MACD, it's looking like it's about to cross over downwards. So on MACD, whenever the signal line and the MACD line is crossed over above the histogram, sorry, the zero line, which is between the histogram, The invisible line that's in between the histogram is what we call the zero line. For those of you who are new into trading. So this line that I just drew up, the blue marker, it is a zero line. So currently the market is trading well above the zero line and the MACD and signal line have crossed over. The RSI is still within the purple field range, so we cannot confirm the RSI oversold, overbought. However, it is starting to go outside the chart. And this indicates a potential sell-off opportunity. So what we can do is we can identify the previous low being 41,750, and then, sorry, the previous low being 42,787, and then the next low is 41,715. We can actually use that as a take profit points, okay? These are TP1 and TP2. And this is for swing tradings only. You cannot do this with scalping, guys. You will get liquidated and lose all your money if you decide to do this on a swing. If you decide to swing trade using scalping strategy, like you will get liquidated. Now, what is the difference? When you're scalping, you're placing larger size volume. So you're placing 1 lot, 2 lot, 5 lots, depending on your capital size. You cannot do that shit with swing trading, guys. You will lose thousands because the problem is when you're trading pairs like US 30 and these orders get triggered and your capital is not over 100K, you're gonna get liquidated because it's gonna hit margin call because it's gonna go up 500 points, it's gonna go down 500 points, it's gonna go up 700 points, then you'll lose, right? So you want to give yourself as much flexibility as possible. So let's, for the sake of this, let's say we're gonna do a short position. We're gonna place a sell stop about 200 to 300 points below. So below the previous low, about here. So we'll place a sell stop here. And then the idea is to place the stop loss a little bit higher than the previous high. That way you don't get liquidated that easily. It's pretty straightforward, guys. And then extra points, if you can identify some wicks appearing down from top to bottom. So if you see some bearish engulfing candles, or if you see some pin bars, extra accurate points, accuracy points, meaning there's a higher chance of your trade going into profits. Okay, so all we're doing here, we're keeping it as simple as possible. Now, there is other ways that I typically like to calculate, but for the sake of this lesson, I'm trying to keep it as simple as possible without going into too much math. So all you're doing is you're going to place a sell stop order right here at 43,153. And we're going to hope to reach that sell stop order, trigger the sell stop order, and TP1 is going to be at 42,931. TP2 is going to be 42,046 for US 30. Now let's try to do this with gold. Okay, gold is also a very volatile market. It is also very trendy. So let's try to place some orders by going backwards in time. Okay, so, oh, sorry, that's Ethereum. Let's try to do gold. Gold would make more sense. Gold has been moving crazy. Okay, we'll do gold. What do I hear? Okay, so in this scenario, we just experienced some crazy drop. Okay, now we're gonna open up relative strength index. Let's try to identify. Oh, that's perfect. Looks like it finally came out of the, so in the 1 hour time frame, gold is currently trading outside the purple field, and we're seeing a bit of a divergence here. We're seeing a bullish divergence. So the market is starting to point upwards back into the purple field. We want to see this. So this means that we're starting to, the downtrend is starting to slow down. So let's use a technique that I just mentioned, and we're gonna try to place a buy stop order in this scenario because the market the market is at a imminent reversal here. We're potentially seeing imminent reversal. So overall, this is a downtrend. However, it's starting to pull back. So this is a potential reversal. How do we confirm the reversal? By placing a stop order. That way you don't get liquidated right away. I'll tell you the mistakes that a lot of people do. They'll see this market and they'll just do a buy, and then the market will drop like 500 points, and then you get liquidated in the position. How many times that happened to you guys? Did that ever happen to someone? You see a market where you think the reversal will occur, and you place instant execution, and then it starts to drop like crazy, and then now you're in a drawdown, and you're panicking because you're in a negative position, and it's just dropping and dropping, and so you're a little panicky and then you end up pulling out at a loss or it hits your stop loss. How many times that happened to you? Type number 3 in the general chat if that ever happened to you. Enter into a position, it starts, thinking that it will reverse and you end up in a big drawdown where it made you lose money or made you lose your prop firm account or whatever the situation is. It's not a fun position to be in, is it, guys? So I'm going to teach you guys how to prevent that and accurately take advantage of the market condition. So now we're going to place a buy stop order. Okay. Set this. So I want everyone, you know how much I hate demo accounts, right, guys? I hate demo accounts. However, for the sake of this lesson, I want everybody to do this. I want everyone to open up a demo account and place this buy stop order. Let's see. I know this is the previous market where like the events have already occurred, but place the buy stop according to how many points above the market. So right now we're looking at, so in this scenario, we're looking at about 220 to 30 points above. So we're going to place it 30 points above. So we're going to place place it about 30 points above the market. And we're going to try to capture this buy stop. So this is a buy stop order. So this is not instant execution, guys. Again, this is a buy stop order. I'm going to write it down. Buy stop placed. Okay. So this is a buy stop order, guys. And the take profit, we're going to make it. So we're going to have about 2 to 3 take profits. Okay. So take profit number 1 is going to be the previous high right here. Okay. So that is 26,090. And then the next take profit, so TP2, this is TP1, TP1, TP2, and then we're gonna place a TP3. Okay, so now we have 3 take profit zones. Now, how do you place different TPs and how do you take advantage of different TPs? What I personally do is whenever I'm placing these type of trades, I like to open multiple increments of trades instead of placing one large trade. That way, I can take profit of my first position, take profit of my second position, take profit of my third position in 3 different orders. Okay, so or 2 to 3 different orders. So that's how you can take advantage of different TP zones. Okay. And then where am I going to place the stop loss? The stop loss is very simple. You don't want to get liquidated out of your position. So we're going to place a stop loss below the previous low. So the most recent low is about 26,658. So we're going to put it around 26.54. That way you don't get liquidated from the swings. Okay. Now let's see what happens. Okay, let's see what happens. How many of you guys think this will hit take profit before it hits stop loss? And how many of you think this will hit stop loss before take profit? Let's see. Based with this technique, if we're about to go into the next period, what do you guys think will happen? If If you think it'll be profit, type number 3. If you think this will be a loss, type number 2 into the chat, general chat. We're about to find out. I'm about to click, and you guys are about to find out which one is it gonna be. Okay. We're about to do this now. Okay. Remember, the buy stop is at 2,679. Okay, guys. So right now we're not in an entry. Okay. Okay, we are in an entry. So now we're in a little bit of profit. Okay, guys. We're in a small profit. The buy stop got triggered. We're in a small profit. Okay. Take profit 1 just got smashed. Okay, we're approaching take profit number 2. Okay, we're ranging in TP1. Take profit number 2 got smashed. Okay, so hopefully you guys took profit of TP1 and TP2 because TP3 never got hit. So in this case, how do we prevent your position to take minimal profit? I'm gonna teach you guys a trick. Okay, I think a lot of you guys don't know how to do this trick. So I'm gonna, for the sake of the lesson, I'm gonna go back into the time and show you guys how you can guarantee leaving this market with profit. So TP2 got smashed, right? So let's say for the sake of this lesson, you have 3 positions open. So you close TP1 already, you close TP2, now you have a third position, okay? So what you're going to do is you're going to place a stop loss. You're going to modify your position that you've already entered. So all 3 of your positions started from 2679, right? So you guys are going to place a stop loss and modify that position for the TP1 zone. So TP1 is 26,091. So what you're going to do is modify the stop loss. So for the sake of this lesson, the current market price is 2,700. You're going to modify the stop loss at 2691. That way, even if the market reverses, you can take that minimal profit. And this is not about making money on the third position. This is more so you're trying to take TP3, but if the market reverses, you can at least walk away with some profits, okay? So look what happens. Okay, it's starting to pull back. It's starting to pull back, but because you had take profit right here, you still left the market in profit. So you don't have to worry about the market reversal at that point. So this is a successful trade that you just made. Okay, now for the sake of this lesson, let's do another position, but then now sell. Okay, now we're gonna place a sell. So now we've gotten to a point, RSI starting to show downwards momentum. Let's take a look at MACD, what MACD is doing. Okay, MACD have crossed over above the 0 line. Okay, that is a potential reversal, right, guys? Remember what I told you, when the MACD and the signal line starts to cross over, potential reversal, guys. Okay, we're imminent, potential reversal. Okay, we see a potential reversal. What are we gonna do? We're gonna place a sell stop order. Okay, let's place a sell stop order below the previous low. So the previous low is right here. We'll place it right here. Sell stop. And then let's place take profit number 1, take profit number 2, take profit number 3. Okay, let's see what happens. Oh, sorry, I forgot to place a stop loss. Okay, so stop loss, we're going to place it around here. Okay, guys, TP1 smashed. TP1 smashed. TP2 smashed. TP3 smashed. It's really that simple, guys. Really that simple. It's a very easy technique. These stop orders, all I'm doing is lining it up. I'm lining up the previous lows and using that as a market condition for your take profit zones. It's really that simple. It's really that simple, guys. Yeah, I'm gonna pause the recording.